What's up everyone, this is DaviFX here, back again with another analysis video. So first of all, I would like to apologize for not having a analysis video yesterday. First thing, I was very busy and I couldn't make it physically. And the second of all, I had a new PC arrive, so I had to set up everything. I'm not using the laptop anymore, so I ordered a camera for even better quality of these videos. So stick with me as you won't be able to see me throughout this video, but today or tomorrow my camera is going to be delivered, and today or tomorrow you're going to be able to see me again and we can interact with each other once again. So we had a crazy week last week. It was over 20 it's around 20 R in profit. So we took some long positions somewhere around here. We also took long positions somewhere around here, and we also took some long positions somewhere around here. So it was crazy risk to reward trades. It was all there. You can go to watch all my other YouTube videos from last week where I talked about that I am expecting this bullish rally. I'm not talking about bullish reversal overall. As I zoom out here, we still see that the bearish structure is still there. The market is still overall moving down, but it was very oversold market conditions. And since it's the beginning of the week, I'm gonna restart look at monthly candles again, but I really expected for at least a little bit of reversal to happen before taking any other actions or having any other expectations in the markets. I'm not talking about that the market is reversing right now. It could definitely be the case, as you can see if I zoom out. Like, we are overall very bullish. We had retracements here, we had retracements here, we had retracements here. Now this happened because of all the stuff that's going on in the world right now. It's like everything in one, coronavirus, war, inflation, and so on and so on and so on. But it doesn't matter that the market is going to crash just because of that. Look at this. Let me go to the daily time frame. Look at this bullish price action. For so many years the market has been moving up, and I don't think this is the case where the market is going to turn bearish and crash, as a lot of people are saying right now. This just the same way as the market is moving on the 5-minute time frame and has these retracements, the same way the price has to move up and retrace in the longer perspective. Now on the 5-minute, these retracements can last for 15 minutes. Now on the bigger time frame, these retracements can last for months, maybe half a year. So I think this is the case. The market is not crashing, in my opinion. I think it's just normal price action, normal retracement, overall long term some profit taking and some fear in the markets. But it's always a cycle. It's always people going from one stage to the other, where this one is fear and this one is greed. So now when the people are so greedy and the market is very high, the market starts turning around and starts moving down, and we come to this fear market where we can see here and here. And once it's a lot of fear in the markets and the market is down a lot, that's when it's a good opportunity to start buying. And we come to this again, and it's all a cycle, spinning cycle, never ending cycle. And this is a history. It's not something I'm making up. It's all statistics. So we took some very good positions last week, but let's now talk about what we are expecting for this upcoming week. So looking at the monthly time frame, I had in the previous videos, I had this monthly resistance right here. And when the market, when this monthly candle was here at the bottom, I really said I expect this becoming a wick. If we go down to the daily time frame, we can see that the market was hanging around below. But I said, even though that the market on the daily time frame is, you know, moving below, it doesn't mean this zone is not respected, because monthly candle is 30 days. So for 10 or 15 days, we can hang around here and then eventually close above. And this is exactly what happened. We have 10 hours left for this monthly candle to close, and this is the, you know, result of what happened. So now, since we have this monthly closure, I think we're gonna close somewhere like here. I want to quickly go over to US 500 chart, and as you can see, there's a potential that this monthly candle is gonna end up closing bullish, and the same thing on US 30. So very weak, you know, bearish candles on the monthly. And now, what can I expect this next monthly candle to be? Now, since overall market is moving up, you know, for many months and years, and I expect this to be retracement, I'm not expecting this to be crash market. That means that I believe for this upcoming next month, we might have another little bit dip to somewhere at the bottom of the zone. You know, I don't think we're gonna go below this wick, but we might have a wick. So, you know, on the monthly time frame, a wick can mean, you know, a dip down for 3, 4, 5, or even 10 days, or even 15 days. And then eventually, I believe we're gonna end up closing bullish. So now, two scenarios: we're either gonna dip very deep and then close somewhere around this area where we are right now, or we're gonna have a quick spike to the downside and then a very bullish candle, since, you know, we still have momentum here. Now let me pull out a Fibonacci, and as you can see, the price perfectly respected this 0.5 retracement. So just another confirmation, you know, the market didn't even touch the 0.618, it didn't touch, you know, 0.5 and all those, it's rejecting of 0.5. So there's a potential scenario that the market might come back to 0.5 to test it again before continuing up, or if the bullish momentum continues on the lower time frame, we might dip just a little bit before closing pretty bullish. Now, where are the monthly targets? You know, we have some zones which I want to look at the weekly time frame, because it has a little bit more price action. So now the first resistance, you know, we can all agree it's here. You know, we are looking at the weekly time frame. So now we have two very strong rejections here on the weekly. We have resistance somewhere around here with these 3-week candles. Now the price pushed up and then pushed down of this. So this is a very significant zone. And now, as you can see on this weekly time frame, this week so far we are pushing down, but we have not yet touched this, you know, zone right here. So even if the market ends up moving down, I still believe the market might want to come back to the zone, test this resistance before forming that monthly wick that I was talking about, and, you know, potentially reversing. Now, this is my first weekly resistance, and the second weekly resistance point of interest is gonna be, I think we can use, you know, this area. This is the line, this is a thin line, but, you know, I'm talking about somewhere around this range right here. You know, this is a pretty wide range on the weekly time frame. So if the market ends up coming back to this, you know, zone, then we should be very aware trading in the zone, because there could be a lot of, you know, long-term consolidation before either market rejecting the zone or market breaking above the zone. So when the markets come to this area, I'm going to be very safe, or very like ready for market to consolidate a little bit. So once again, this is a weekly time frame, so this consolidation can last for weeks, and a lot of people can be, you know, very desperate in this area if market ends up consolidating. Now, so far what I see in the markets, I see very nice market conditions. I really like what I see. I really like this impulse. The market is moving just as expected. Now, I want everybody to keep in mind that we have this monthly level. I'm gonna delete this off the screen, as you know, to make it more clean and make it more clean as we, look at different time frames. But I want everybody to keep that in mind. Now, if we drop down to the daily time frame, we have, consecutive bullish candles forming on the daily 1, 2, 3, 4 bullish candles. If we look at some, market price action patterns, we have potential double bottom here, and we do have a neckline that can be counted as this. So, in the textbooks, as everybody says, when the market forms a double bottom, it does have a neckline, which is this area right here. So if that happens, there's a probability that the market is going to come back to retest this neckline before continuing to the upside. So this is exactly the area we can have. I'm going to leave this line here and drop down to the lower time frame. There's not much to talk about on daily because not much going on over here. We have a lot of stuff going on here. So I'm going to drop down to the lower time frame and see what we got. So first thing that pops out to me is this beautiful 4-hour demand. I'm right away going to just, mark this up on my charts. So right away, just seeing this, I see potential, setup for the market to drop down to this retest and then continue to the upside. Now, this is a likely setup because this double bottom is very, very obvious. This neckline is very obvious. So there could be potentially a lot of buyers here. And for the markets to get them out, it might want to push down a little bit lower to grab these stop orders, grab this liquidity from this demand, and then continue to the upside. So that's a really likely scenario. Now, another thing that I want to mention is the momentum that we have here is very, very strong. So every time you see a strong momentum, the retracements are not going to be as deep. Now, if the momentum is not as strong, the retracements can be 0.5, 0.618. Those retracements are a little bit deeper. Now, since we have a really strong momentum here, there is still potential that this zone is going to be respected. Maybe we're going to have some wicks and then continue to the upside. So now we have this zone and we have this zone. And if I drop down to the lower time frame, such as 1 hour, we can see that we do have another demand. Let me fix this a little quick. We do have another demand right on this neckline. So two scenarios. I always like to have plan A and plan B. Now, once again, I'm looking for the setup just because we do have a lot of momentum here. Now, this is a potential scenario that I'm already looking at. I want this retest, rejection. I want to see some reversal patterns before looking to go long. Now, if this doesn't play out, then that's okay. I'm going to wait for the market to drop down to this zone and look for longs from here. This is completely fine. I really love to have plan A, plan B, but following this momentum, we do have, series of higher highs and higher lows forming in the markets. So there's a really strong potential of these two scenarios. Now, this is my top-down analysis. I really like to keep it simple, neat, and clean, and that's how I'm gonna keep it. It has been working for me over, amazingly over 5 years. Statistically, May and June and July are the best performing months for me. I call out all the trades that I take. If you want to learn to trade like I do, if you want to see the markets like I do, or if you want to follow my trades, or if you want to follow my daily life, you can follow my Instagram, you can check out my course, or you can check out my signals room. With all of that is in the description. So if you are interested in any of that, you can go below and look for those links. And that's it for my analysis today. Thank you for watching, and I'll see you all tomorrow. Peace.